Howdy everyone, Greg Segovia here with Precision Senior Marketing, and today we're going to talk about how to scale your business. This is an essential guide for all you insurance agents out there. So what does every agent have in common? They all want to write more business, right? Or at least I hope they do. Anyone who has been in this industry for any amount of time can tell you that increasing your production isn't something that just happens. You have to plan and work to make it happen. So today, I want to talk about some key principles you will need to consider when coming up with your business plan that will be essential to scaling your business. I'm going to share with you the factors that the nation's leading call centers and agencies focus on to make sure they are running a successful business. My hope is, at the end of this video, you'll have a little bit more insight on how you can work towards scaling your agency and doing it successfully. To start, we need to quickly go over 3 essential factors in any agency's business: cash flow, cost per acquisition or CPA, and lifetime value or LTV. Cash flow is essentially the net amount of cash transferring in and out of a business. CPA stands for cost per acquisition. This refers to the average amount it costs for you to get a policy issued and paid. And CPA is broken down into 2 sections: media CPA and fixed cost CPA. Media CPA is the average amount you spend on leads or marketing to acquire a sale. Fixed cost CPA refers to everything else. For an individual agent, the fixed cost part is pretty simple. But if you plan on hiring additional agents and building a hierarchy, it gets more complicated. How much did you have to pay your agent for that sale? Are you paying admin to follow up on policies or to handle phones? What about office space, computers, dialers, licensing fees, etc.? It's imperative that you be able to calculate your total CPA because you need to make sure it is lower than the 3rd key factor, lifetime value or LTV. LTV or lifetime value is simply the average amount of commission you earn over the life of a policy. This will vary from agency to agency based on many factors, but if you know your LTV and your CPA, you know how much total profit you are going to make every client you add on the books. An important thing to keep in mind is we are talking about lifetime value. Major companies don't judge the profitability of their business on just what they make the first year, and neither should you. As long as your LTV is higher than your CPA, then you are making a profit. So for example, if it costs you $300 to acquire a policy, and the first year commission is only $200, it may at first glance look like that's a bad investment. But if the LTV on that policy is $1,000 over the course of 5 years, then you came out way ahead. You paid $300 to profit $700. It just took you 5 years to realize those profits. Too often, I talk to agents who are hesitant to invest in their business because they are only looking at first-year profit margin. You are running a business, and just like any other business, you're going to have to invest in it to see it grow. How much you want to grow the business is a personal goal, of course, but once you know your CPA and LTV, you know exactly how much each policy is worth, and from there, you can figure out how many policies you need to reach your goal. Now that we know how to calculate how much business it will take to reach your goals, we need to talk about your budget. Your budget is how much you have to spend on your business. This could be renewal commissions, savings, or even a bank loan, but without a budget, you won't be able to scale your business. Maybe you're an established agent who is just looking to increase your sales by a few policies a month, and your budget is $200 per week. Or maybe you're looking to build a 15-person call center, and your budget is $1.5 million per year. Whatever it is, you need to have it defined and make sure it is available to be used as needed for leads and marketing. And once you've got your budget squared away, now it's time to consider the management side of starting an agency. The hardest part of running an agency is managing agents and managing leads. So for leads, even if you're looking to just grow your personal business, this still applies. You need to make sure you have enough leads coming in that you and your agents can hit their sales goals and remain happy. For agents, you also need to make sure that you always have enough agents available to work the leads that you're purchasing. And for lead management, let's say you decide to run a 5-man call center and purchase 20 leads a day for each of your agents. You now have 100 leads coming in per day. So what happens when 2 of your agents call in sick? Are you keeping their workdays so full that they can't absorb the extra 40 leads you purchased? For you individual agents, do you have a plan to pause your lead generation for times when you are out of the office? It's important to plan and find a balance that keeps the agents busy with leads but doesn't overexpose your business. You also want to have procedures in place to make sure that you are getting the most out of your leads. When I say this, most people's minds immediately go to selling techniques and how to close more sales. But often, it's more effective to focus on solidifying the sales you already are making to reduce attrition. If you can reduce the percentage of clients who leave you yearly from 15% down to 5%, then you will most likely see more profit from that than you would by increasing your closing percentage. Here at PSM, we focus on Medicare Advantage, so I'm going to use that as an example, but this will apply to any product line. First, align your agents with how the agency is paid. You can bonus your agents after the rapid disenrollment period is up and charge them back if a client disenrolls during that period. The idea is that the agent gets paid when the company does and also charged back when the company does. This pushes the agent to not only write cleaner business, but also engage in post-sale activities, ensuring the business stays in force. Second, you also want to have sales monitoring procedures to make sure your agents are following proper procedures. Make sure they are looking up doctors and drugs on every presentation. Make sure they are signing a PCP on every call. Make sure all compliance requirements are being met. And also make sure they are doing an HRA on every call as well. Lastly, you want to have a plan for post-sale activities. Follow up with your clients when the policy is issued and then at regular intervals. 30, 60, 90 days, and then again every 6 months or so. Make sure they know how to use their plan and make sure they are happy with it, of course. By doing all of this, you will drastically increase your placement and persistency rates. Placement and persistency are vital to your success. You spent the money to acquire these clients, so you need to make sure you keep them on the books. So far, we've covered the key factors you need to consider when planning to scale your business. How to maximize commissions, managing your lead to workforce ratio, and how to calculate the profitability of your business by using LTV and CPA. The last thing I want to leave you with is how to calculate the value of your business using a ratio. This simple method will give you a snapshot of the overall health of your business model. Take your LTV and divide it by your customer acquisition cost, or CAC. CAC is similar to CPA, but measures placed policies rather than submitted policies. For Medicare Advantage, this will be any policy that clears the rapid disenrollment period. For many of you, this will be nearly identical to your CPA, but for telesales model or call centers, your CAC will be higher than your CPA for sure. If your LTV to CAC ratio is 1.0 or lower, that's bad. You are only breaking even because the LTV is the same as what you were paying to acquire that policy. Aim for 3.0 or higher. That means your profit is twice as much as you are investing. If I told you I'd give you $300 tomorrow for every $100 you give me today, would you take that deal? I know I would, and I'm sure most of you would too. And if you have any questions or want to talk about how to best scale your business, please give us a call and ask to speak with one of our marketing directors. We'll be happy to take the time to go over any of this in more detail and can even run a personalized calculation for you on what kind of ROI you can expect. Thank you for your time as always, and happy selling.